All right, we're here with Matt from Neo Home Loans, and I would love for Matt to help us, the simple folks, understand what really affects interest rates and the overall market. Because we're seeing that slight downtick in interest rates have created a huge uptick in activity. Talk to us about what's going on.
So a lot of folks think that the Federal Reserve controls long-term mortgage rates, and they don't. They control the Fed funds rate, which is a completely different topic. There's several different key elements that will impact overall mortgage rates and the trajectory that they're on. As of late, that little bit of a dip in mortgage rates that we're talking about that spiked applications to a level we haven't seen since mid-June, right? That's not normal in November, but that was due to an unemployment reading that came in that's showing that unemployment is on the rise. Well, if history repeats itself, as it often does, whenever we bottom out with unemployment in a cycle and it starts to move higher, it automatically indicates that we're going into a recession. So time will tell, right? We don't quite know yet, but that's one of the things that will influence mortgage rates lower. The other thing is this week we're receiving some inflation readings. The CPI came out. It's a measure of inflation that the Fed uses, and that came in lower than expectations. And as a result of that, the bond market is on what's called a rally, meaning the price of the bond is starting to increase. Well, as the price of the bond increases and becomes more valuable, the correlating mortgage rate goes down with that. So it'll be interesting to see if we see some additional lower rates here in the next few days, which should lead to another uptick in applications like we saw earlier this month.
And so with that, what should we learn from this?
Well, what we should learn is that small drop in mortgage rates spawned a lot of interest and a lot of applications, right? November, this isn't normal that a level of applications week over week in November is at the level it was in the peak of the season in mid-June, right? So what we should be learning is that as rates come down, there's a lot of pent-up demand on the sidelines, and that demand sees a small move lower in interest rates, and they're jumping into the market. So if we're fence sitting, we got to get off the fence, get into the market, get our pre-approval ready. If we're wanting to buy a home, now's the time to go get that. Because if we wait until mortgage rates drop, there's going to be so much demand in the marketplace, and the inventory level is going to be pressured so much lower. It's going to be very challenging to get a home. So getting a low interest rate and a good deal on a home, those things usually don't line up. Higher interest rates create opportunity for buyers, and then that's something that will help the buyer manage and monitor and know when it's time to refinance when rates do bottom out. Drop that interest rate, drop that payment for the long term.
So if you don't want to have to understand all the things that Matt just said, but you want somebody that can help you through this process, reach out to him.